Do you mind if I basically give an overview of one of the chapters in the book?
I love it, bro. Yes, please.
Okay. All right. One of the things I talk about is running drills. And when I did a live stream last year, I was like, look, I'm going to enter trades, okay? And it's not meant to be right or wrong, but I want you to learn how to desensitize yourself from execution. And this is what I learned from Larry Williams, where he was afraid to get into trades. And I was afraid to get into trades too, because I was like, I don't want to be wrong. Like I cared more about being right than being profitable. Like I wanted to be right. So I had to work very, very hard. And it's still, you still hear it, and it permeates my teaching style and my character as a teacher and trader. I'm highly focused in precision because the outcome, the money is not important to me. It's the perfection of execution, the excellence of execution, the pristine entry, the lowest drawdown, the exits are so close to where the turning point was at. That's what I'm aiming for. I don't care about the money. I know how to make lots of money with very sloppy entry and sloppy holding. I can. That's the easy part. But teaching and conveying the message of precision, knowing what to look for, how to trust the price run, not being scared out of the move, not being worried about what it's going to do. The way you overcome that is you simply use a 1 minute chart. Take a 1 minute chart and use what I just mentioned, well, a few times today, is you're going to have to make it a little bit of an investment to get the data to allow you. And I'm not familiar with anybody else's platforms, so I don't know if it just comes with real-time data. But TradingView, apparently, you have to do something to get these lower time frame sub 1 minute charts. I don't care what they charge. I'm not an affiliate. They asked me to be an affiliate with them. I declined it. I kept the screenshot in case anybody ever tries to tell me, oh, you're an affiliate with TradingView. I'm not an affiliate with TradingView. I have no affiliation with anybody. But I say that for disclosure because I want you to understand that for you to really learn how to do this well and to speed up the learning curve is simply look at a 1 minute chart. Look for single highs and relative equal highs on the 1 minute chart all day long. As you see them form, mark them out, okay? And then you're going to look at the 1 minute for your draw and liquidity, and the 5 second and the 15 second are like your 1 minute and 5 minute. That's going to be like your entry on. You're entering on the 5 and 15 second chart using inefficiencies like the fair value gap. And what you're trying to do is you're entering think of it like a silver bullet. If you think that relative equal high on the 1 minute chart is where the market's going to rip to, and it may only be 10, 12 handles, it doesn't matter. The range has absolutely nothing to do with that. You're just trying to get a feel for every price run, every 1 minute high and low, relative equal high, relative equal low. It's going to go back and forth all day long, all day long. And you're only going to do one micro contract. That's it. You're not trying to make money. You're just desensitizing yourself, getting in, trading it to the run to the high, run out the liquidity. If it continues on, let it rip. Wait for another high and low form, and then look for the other direction and back and forth. And I was basically doing that last year with a live stream. And I was saying, look, this is what you do. And some people came in, they didn't listen to the beginning of the stream. I said, this is not me trying to make money in front of you. I'm teaching you how to do drills. Okay. So you do this for a couple weeks with no bias. You're just doing it all day long. You're going to have lots of transactions. And it's very hard for someone to do this and not feel like the outcome should be way, way more in your favor. By doing it this way, you're not teaching yourself to look for the trade to be perfect. You're not looking for the trade to be profitable. You're not even looking for it to be right. You're just following the procedure of there's a fair value gap and there's liquidity. I'm aiming for that over and over and over again. You desensitize yourself to the outcome. Then what you want to do is after 2 weeks of doing that, you want to apply what you think the daily charts, what direction it's moving in. And then what you'll do is, let's just say, for instance, that you think the daily chart's drawing down to an inefficiency that's below current market price. So that means what? Your bias on the daily chart is bearish. So you think it's going to reach down into that inefficiency. You still are going to be buying and selling with the same drill. Liquidity above and below 1 minute highs and lows, or relative equal highs and lows on the 1 minute chart. You're entering with the 5 and or 15-second inefficiencies. So treat it like a fair value gap, silver bullet type thing. When it starts moving in the direction of the liquidity that you see on the 1 minute chart, and if it's going lower with the daily bias, you'll do 3 micros. Anything that's contrary to the daily bias, you only do 1. Now, what are you teaching yourself? You're teaching yourself to add to positions on side and in bias. But for completeness sake and to keep yourself tapped into the marketplace and teaching yourself continuously that you don't have to be right about everything, you'll see the cause and effect, the actual cumulative experience that you'll get from when the moves are likely to go lower because of the daily charts controlling that. It's the lower time frames are parent and contingent. That relationship, they're contingent upon and subordinate to what the higher time frame charts are doing. But it doesn't change the fact that you won't see little micro rallies that go higher. So do you want to put most of your position or equal to the same position size you would do when you're trading on side with the higher time frame? Absolutely not. So by having 1 in there when you're trading against the daily bias, you're getting a feel for what it's like to be engaging with that, but you're not putting a number in terms of the outcome that's going to have any real detrimental impact on you. So you're getting, this is what it looks like when I trade against what I should know not to do, but I'm also getting the experience to see what it's like and the measurement of the resistance of that move coming to fruition and how it doesn't do it very easily. But sticking to bias by having 3 micros on the same side of looking at the daily bias, drawing lower, and you have a 1 minute relative equal low or a single low is you're aiming for sell side. Again, anchored to that 1 minute time basis, entering off of a 5-second or 15-second chart, just simply looking for a fair value gap. The market drops down, creates the inefficiency, a SIBI, and then it trades up into it. Forms on the 15-second, enter on the 5-second, in case I didn't make that clear enough. That's what you're doing the whole time, all day long. You're going to have dozens and dozens of executions. And what you do is you'll see by not having a bias for 2 weeks, you have experience entering. You don't care about the outcome. You're just following the rules. There's a fair value gap. There's liquidity. I'm aiming for that. If it misses, who cares? It ain't going to do anything to you. It's not going to kill you. If you're doing with the NASDAQ, you're trading with $2 a point, and it's a demo. It's not even going to hurt you. But what you're doing is you're forcing yourself to execute. What rules? This is what I'm looking for. This is all I'm looking for. It's liquidity. It's going to run there or it's not. If it's going to stop me out, it's not going to stop me out with a big stop loss. And I'm getting experience executing. I'm looking for this. I'm looking for this. And when it's forming, I'm taking it with no bias at all. On week 3 and 4, you're applying the daily bias on the daily chart. What do you think it's drawing to? Which, obviously you know what that means. It's either going to go to a higher low on the daily chart or it's going to go to an inefficiency. Where is it reaching for on the daily chart? When you apply that for week 3 and 4, doing this same drill and only doing 1 micro against that bias, but using 3 with it, then now you're going to get a measurable baseline of this is what it looks like trading against the bias with the least amount of leverage. How many times was that right? What's it going to teach you? Stick to bias trading if you're brand new. Don't try to trade against it because you'll have cold facts, data that you can support. This is right here tells me, yeah, there's a few times it probably worked out well, but chances are you're not going to find that one. You're taking every single one of them that forms with this drill. You're doing a laboratory experiment where you're spending all of your existing time that's available for you to be in front of the charts doing these things. It will completely change the whole outlook of what you're doing. You won't anymore have the outcome of it has to be in my favor. I have to be right. You'll discover that it's fun. It becomes entertaining. It's relaxing because you've done it so many times before. You know what you're looking for, but here's the caveat. Because of you watching that 5 and 15-second chart, and what I was saying to you earlier, by when you're looking for price to run in a specific direction, when that 5 and 15-second chart starts leaving gaps that don't want to fill, and they are behind where you are expecting price to move from to your 1 minute draw on liquidity, that information, that insight that you're drawing from these over and over copious examples of constantly putting yourself in there, doing it, you have no idea the advantage of having that. Once it's instilled in, it's like riding a bicycle. I personally haven't rode a bicycle. Let me see. 2018. I know how to ride.
Decade?
Yeah. I mean, I know how to ride a bicycle. So yeah, it's been like 8 years for me. So 8 years it's been since I've been on a bicycle, but I'm confident if I got on a bicycle, I know how to ride it. Well, once you pick up this skill, it's like It only takes a day or two for me to get back in sync with the marketplace because I know this is the skill set I tap into. But once you feel this, once you know what it looks like, it's like you have this rhythm that you plug right into. All it takes is a day or so for me to get, like, if I spend the whole holiday season away from the marketplace, when I come back, I always used to tell my students, okay, look, give me a day or two. I'm a little rusty right now. I just got to get the feel and the rhythm what the market's doing. That's not me saying I got to see, if this stuff still works. I personally have to plug into what it's doing right now. And I watch the lower time frames. I do lots of demo trading. I push in all these different types of strategies on the lower time frames, and then immediately I get a feel for, okay, this is what it wants to do. And then I'm dialed in, and then everything I call for was behind a paywall, and they'll tell you I was in the high 90%. Every time I come out forward and publicly tell in live streams, I'll go on other people's live streams, say, watch this level, note that, and then I'll come back and I'll show you an example where I actually used that level. It's applying same strategies that I've already talked about, but what I've said today is like a wonderful help. It helps build it. First of all, let me tell you the benefits of it. It will answer a lot of the things that people are fearful of. They don't know which fair value gap to use. You'll learn what that is. You'll know by examples of having done so many of them. You'll know which draw on liquidity is a good one right now. You'll know market structure better on a micro scale, which is high frequency trading. You'll be able to trade any market, not just NQ, not just Forex, but you'll be able to go into anything and trade it. Anything. I don't personally, and I would never trade Bitcoin, but I have done these things in demo, and I've done pretty good, on the lower time frames, just to entertain my kids and say, look, like Cameron and say, can you do it with Bitcoin? I say my students all the time ask me to do this, and I don't want to make a big deal of this, but let's just go and do it. And it's the same kind of stuff, but I would never want to go do that with Bitcoin. And some of the Bitcoin runs were pretty exaggerated, which was fun when I was right, but it wasn't enough for me to come out and say, I'm going to trade now crypto because my stuff works. I've never put money into a crypto trade, and I never would. But I have students that have made lots of money doing it. So I take solace in knowing that they were able to use it there. So that to me is enough to warrant, a response. Say, look, don't take my word for it. My students, they say it works there. But it'll teach you not to fear the outcome. It'll teach you how to trust the price run that you're inside of. And also, here's the benefit. Here's the rub that nobody can really pick up on until you go through this process. You will feel it. You will feel the disconnection by watching live price action when there's a disconnect. When manipulation enters the marketplace and that trade has no chance of coming to fruition, when that happens, you'll see it and you'll feel it. The way it comes in is it'll reflect in the 5 and the 15-second chart. It's like before an earthquake happens, all these little animals and critters, they start acting crazy. What are they responding to? The little tiny micro shocks. That's the same thing that we're picking up on the 5 and 15-second chart. But then 10 minutes later, all of a sudden, shit's breaking loose and everything's shaking around, and the ground splits open, and you see these big cracks on the 1 and 5 and hour chart. Like it's everybody sees it now. We had an earthquake. Well, it starts on the lower time frame. So by having your sensitivity anchored to those time frames and your existing price run that you expect to see happen, when those things that you look for, the sensitivity when it's going to go higher, if it's not respecting the upper half of the PD arrays and it's exploring and laying bodies down in the lower half of them, and you break 3 PD arrays on that 5 and or 15-second chart, that's not a lot in terms of price run. And you can foresee when you should bail on the trade. And you'll have no problems just bailing. It won't be like, oh, do I hold it? What happens if I get out and it starts running? You won't feel that at all. It'll be, I'm used to this. This is not doing it. I got disturbance in the force. I'm unplugging. And it's done. You don't have any qualms about it. You don't have any regrets over it. You just unplug. Boom, you're done. Next one. Move right to the next one. And you become a machine. You're not a worrisome organic creature that's wrapped up in a bundle of nerves. Oh, is this going to work out in my favor? Because you've rushed. You watched a couple videos. You think you understand because you saw a video. You draw out your little notes and stuff and say, okay, here's the fair value gap. And it's supposed to happen between 10 o'clock and 11 o'clock in the morning. And it's going to do this. It's going to do that. But then now you're looking at the chart. Now you have your funded account. Now you're trying to get that combine passed. Now you're trying to get your eval, to a position where you can roll into where you can start making money. And now every fair value gap looks like a middle finger saying, come on, bitch, try it. Come on, bitch, try it. That's what it feels like. It feels like you're being taught because you haven't spent enough time doing what I just said today. By desensitizing yourself, you will know which ones are effective and correct to trade on because you've seen so many of them before and you know what it looks like when price is running off of the PD arrays where it supports it. You can see when it's going to start running and how it will stay running in your favor. I don't have any doubts at all when I'm in a price run. And that's why I'm adding to positions. I also know where the price will run back into deep retracements. Like, for instance, look at the example I did the other day. It's a silent video. That upper inversion fair value gap, until we break down to the lower third, or I'm sorry, lower quarter of where I thought the price was going to go, it can always retrace back up into that. Even though it was making lower lows and it broke lower and it came right back up there and stabbed up into right underneath it, that's all permissible. And you learn that comfort of not having to worry about, I got to jam my stop loss down there and protect my position. No, you don't. Who said you had to do that? Your fear said that. Your little experience, your little time doing tape reading, your little time working in demo, your little time doing drills, because you want to rush. And I understand that. It makes perfect sense for you to feel that way. I wanted to do the same thing. Just get me to the part where I'm making money because that's the experience I'm looking for. That's the only experience that matters. Results are the only thing that matter. That's bullshit. Process is the only thing that matters. Because if you have the right process and you follow that over and over and over again and you stick to it, that process will yield a positive outcome. If what you're doing makes sense and it's a sound model and you understand price action, and you understand liquidity and inefficiencies and the ebb and flow that markets often all day long create dozens of opportunities. I'm literally telling you how to trade every hour candle. That's what that chapter is, trading every hour's candle and how to do it effectively. So that means you can walk out there anytime today. Oh, I overslept. My wife had me doing the honeydew list and I could not get in front of the 9:30 opening. I missed the silver bullet at 10 o'clock. So what do? Okay, what's the range still for 10 o'clock into 11 o'clock? What's unfulfilled? What's unfinished business? Where's the draw on liquidity? If it's still there, then trade it. If not, trade the 11 o'clock into the noon. You won't fear missing anything. It feels like, allow me to use this analogy, the Incredible Hulk. He's strong, he's powerful, he's beating up everybody, throws Loki around, ragdolls and whatever. When Thanos got rocked by him, punched him in his face, beat him all up, did Thanos have like, oh shit, this green son of a bitch he's going to tear me up? No, he just started whooping his ass because he knew what he could do. He let him feel it. Come on, feel it. Hit me what you got. And then he walked all over the Incredible Hulk, beat his ass. Okay, well, that's what this does for you. It gives you this confidence that from the other side of the fence, people listening to you talk about what you know you can do, what you're comfortable doing. It sounds like arrogance. It sounds narcissistic. It sounds egotistical. It sounds like you're full of yourself. No, absolutely not. It's you having done all the hard work. You pushed everything aside, all the doubts, all the misconceptions, all the bullshit you hear on the internet. Nobody can time the market. And you put yourself in front of the charts and you submitted to this process. And what you'll discover inside of 1 month, 4 weeks is all it takes, folks. 4 weeks. You will be able to find setups every 60 minutes. Every 60 minutes. Now, am I saying you're going to get a 100 pip run or a 100 handle run every hour? Absolutely not. But you can if it forms it in terms of the opportunity of range expansion, if that's what you're looking for. But I'm talking about bread and butter, pay your fucking bills, get your grocery money. Every hour, you can find a setup like that. Now, what happens when you say, this is wonderful, but I only have 1 hour a day to trade. My life doesn't afford me any more time than that. Then you do this in that 1 hour trading. And you don't worry about anything else I've taught. You don't worry about what my other students are making money with. I don't care if it's millions of dollars. They get the highest payout. I don't give a shit. That's not you. That's not an invitation for you to do what they're doing. You still have to find your niche, your place in this. and it's going to be unique. But that ain't all you'll ever be. Right now, this is what you have. You only have an hour or whatever it is, the time, or if it's whatever day of the week you're limited to. Who gives a shit? That's what you have. That's what you work with. You have to adapt, but you have no excuses. Zero. You have none of you have excuses why you can't go out there and find something to replace your income. At the very minimum, half of your income. And that right down in the grand scheme of things, how everything's so expensive, it is so liberating to know that this skill set is available to you. And all it takes is you to sit down and say, I'm not going to come into this with any expectation. I'm going to see what comes from it. This is what the rules were. This is what I'm going to submit to, and I'm going to keep a log of what it is. How many handles or how many pips, regardless of whether you're trading, forex or index futures or commodities, it doesn't matter. You keep a running log of this is what I did. I went long. I did one contract of a micro contract, and it was a fair value gap here, there. And it's better for you to see this at the end of the week and reflect on it and take screenshots. Really treat it like a lab experiment, like you're in college. Okay. And I don't want you emailing me this shit because so many people email me and say, what do you think about this? Like I'm grading them. Like I don't have time. If I did that to everybody, I would never get anything done. So it's not, I'm not trying to be ignorant or dismiss everyone, but it's for you to keep this information. And then once you do 1 month of it, you're going to find that you can watch price action with a lot more understanding. You'll be able to read it better. You'll know much more confidently what you think is going to happen. It won't be perfect, but you're going to have a whole lot more understanding. And then you try it on month 2 and you compare your results with what you did in month 1. And I promise you, it will be light years in advancement. And anytime you want to practice, this is what I do. When I tell you, I used to tell my students all the time when I was behind the paywall, I'd say, look, I'm running drills. I'm running drills. What is that? I'm doing high frequency trading. I'm constantly feeding myself. Is the market delivering like this? What happens if it doesn't do it? What happens if you keep getting into these trades and it keeps overlapping the gap that you're trying to trade off of? It's going to fail, isn't it? The common misnomer is this stuff doesn't work. See, look at this. The takeaway is it's teaching you that this is what this environment looks like. Don't trade in it. Don't trade in this. Don't keep pushing into this and think that you're going to get the right one eventually. Stop trading. Wait until the afternoon or trade the lunch macro. Find a 10 o'clock lower high and run into that as a retracement. You see how all of these protocols affords me the ability that I don't give a fuck. I don't care what the market's going to do. I don't care. I don't care. I can literally wake up, don't look at the chart, don't give me a bias, walk out there, and this is what I'm going to trade right now. This is it. And I will whip the shit out of anything else out there just with that mindset and that approach. I don't need all these gimmicks. You don't need market depth. You don't need level 2 data. You don't need market profile. You don't need order flow. You don't need all that horse shit. You don't need none of that stuff. But you need to know where the market's likely to go to next. You have to have that first. Then, is the market showing you a willingness that it wants to operate in low resistance liquidity runs? That means it's not fuzzy. It's not sharing a lot of the space in the previous candles. It's elongating. It's leaving small little inefficiencies unfilled. And if there is a fair value gap, it doesn't fully close them in. You have everything in your favor now. You have everything. If you're trading in a session time that's conducive for these price runs to be there, 7 o'clock to 9 o'clock, wait 30 minutes from 9 o'clock to 9:30. Just relax and chill out. Grab some breakfast if you want to. And then at 9:30, wait for that opening bell. First present the fair value gap. If there's a gap, where do we open? Where's the mid gap? There's the right there. That's the first thing you're going to do. You see how there's rules to this? And this is one thing after the next. This is what we're looking for. The whole day, I have a whole protocol based on what time of day it is, what I'm looking for. This is what's going to be in the book, but I've already taught it all. I've already taught all these things. And to have, I guess maybe in a way it'll be helpful for you to have it in a book form because it's like here it is in text format. This is all in this chapter. This is what I concern myself with in this order. This is when I do this, that, and other thing. I guess